Being invested in a sawtooth market where it's 2 steps forward and 1 step back. We're wondering how to trade and what to look for next. Gary Glover from Novus Capital is walking us through his weekly report that's including the 60-year cycle insights. Good morning, Gary. How are you?
Yeah, I'm great, Chris. How you going?
I'm looking forward to the 60-year cycle. It's a critical one, and you've put it in this week's report. But before we talk about the market bounce and where you see it's going to from here and what to trade, can we have a look at the numbers that have come through both for your portfolio's performance in the full financial year and also the whopping week that it had last week? What's behind all of that rally?
Yeah. No, actually, for some reason, it's probably it's probably the biggest weekly jump I've seen, actually. So normally I'm a bit light on, for one thing, and secondly, I think the last 13 positions I've got are in the green as well. So that's not a bad response as well. And some of those really some good moves. So just some of the look, I was looking for a little bit of that to buy a little bit of beta, but not some big positions there. I actually think a lot of them were sort of smaller size there, but yeah, they've just been some nice jumps there, and the 360 and the DUB and Dominoes and stuff there. So I've had a bit of a jump. That's all. So look, I expect them to move around a little bit. So I think I'm sure they'll move back and forth a bit here. So as we've seen. So but yeah, nice little move there. Probably the fact that I'm a little bit heavier weighted now. Yeah, but all good. I like to see that. It'd be nice to sort of see it move that way every week.
All year round.
Yeah.
Well, you're now 81% invested, and as you noted, big solid week, which is kind of odd. We're in a bear market. You were on the right side of the bear call, having short positions, but your best week yet is actually a sort of a bear rally, but doing well. So
this is what I'm trying to fix up, because historically my running with the bulls has been my sort of my handbrake there. I tend to sort of be a bit too conservative and maybe get out a bit too early. So I'm working on my weaknesses here. So hopefully a good start here so far.
Well, if this is your week, if this is a week for you, then that's great. Yeah. Well, let's have a look at the portfolio. What's sort of getting you to be fully invested or almost fully invested, very heavily invested at 81% for you. So we have a look at the NASDAQ, which is kind of an overarching chart on the US indices. It's got the spacing that you've pointed out a couple of times before, but you've talked about fib levels and then possible rally. So what's on the cards for the NASDAQ?
Yeah, so just a couple of things there. Like the last few rallies up into those sort of spacings there, they were all on very light volume, so very low conviction rallies. Whereas this last rally there's been a bit more volume in it, and we're also sort of overlapping too. So we've now sort of pushed above the previous swing high. So just a couple of sort of positives in there, you might say. So I know that the trend is still down. We're still in a bit of a bear trend here, but just sort of two positives there. Just change the character, and the volume's a little heavier, and also sort of, because we're sort of in a pretty heavy downtrend and bearish spacing there, the fact that we've now overlapped, that's a bit of a sign of strength as well. So look, may not be over there. I've just got some sort of strong timing here around now from a sort of seasonal point of view, and we're seeing some good volume there, and the price action's overlapping. So just there's probably sort of three positives there. So hence why I've gotten rid of all my short position, and why I'm sort of getting a little heavier invested here.
Okay, well, that's very good to hear three positives on the NASDAQ, even if it is just a shorter rally. Now, the S&P 500, is that a bit of a same boat but less spacing on the chart?
Yeah, that's right. So it's sort of rallied up there. So actually the volumes are probably firmer on the S&P. So probably seeing some stronger volume there. And but yeah, so we're sort of having sort of quite overlapped there. We've probably just gone slightly above there. So, but yeah, we're just sort of holding sort of firm here. So that one's probably not as bullish there, which is kind of strange. You'd think S&P would probably in the Dow would probably be the stronger ones here, but we're just starting to see some sort of positive signs there. So yeah, just maybe we rally back up to the previous swing high, up around that 4.2 or something, then maybe roll off there back down to October or something there. So yeah, just look, everyone's, I think I think we sort of said a couple of weeks ago, so everyone was so bearish, everyone had universally turned bearish, and I was like, oh, because that always concerns you. So the question people always ask is, if everyone's so bearish, then why does the market go down? Because it's not what they're thinking, it's actually how they're positioned. That's the sort of key there. Is if everyone's bullish, then usually everyone's already positioned on the bullish side. So if everyone's bullish, then there's no one's left to buy. So it's the same on the bearish side. If everyone's bearish, then usually they've already positioned for that bearish side. So that if you're a portfolio manager, and you can get to say 20-30% cash, that's how you might be positioned. If you're a trader and you get to 50% cash, or 80% cash, then that's how you're positioned. If you're, just a mum and dad investor, and every now and again you take a little bit off the top at the peaks there, that's, everyone's positioned differently based on the market and the weightings and stuff. But if everyone's got the same view, think about it as always how they're positioned. So, if you've almost everyone you speak to says I'm bearish, then they've already positioned for that. So
they've already done their selling, and when they come out publicly, I'm bearish.
Yeah. Yes.
Yeah.
So they're normally declaring their position in the market rather than their view. So, I think just think about it that way, and that'll sort of, sort of have you sort of train differently. Yeah.
That's a good way to look at it. That makes sense.
Yeah.
So you've looked at the market. You've had the bearish outlook, you've been on the right side, and the timings have been spot on, especially in this cycle. Like it's been quite phenomenal. When you have a look at the chart that you've put in this week's report, the Dow Jones Index, main US, so it's the oldest, 1960s, you got a weekly chart for the 60-year cycle. What on earth is this? So before you get into the technicalities of it, what is this 60-year cycle?
Yeah, so look, with all this sort of like this, there's seasonality in the market. So, like the old sort of Christmas rally and the sell in May and go away. And that seasonality has an overriding theme throughout the year. So it doesn't work all the time, but it has a bearing on the market. And definitely you get your best performance in the 6 months and your worst performance in the other 6 months. So there's definitely sort of cycles within the market which occur every year. And then there's the 4-year presidential cycle, which has your presidential year, and obviously that's the year where the incumbents will be trying to pump markets up, and then you've got your midterm years and things like that. So there's certain cycles that occur in those, and then there's the 10-year cycle, and then 20-year, and then 40, 60, and 90. So there's all these different cycles there. So the best sort of cycle guides that I follow usually use a bit of a mix there, and the 60-year cycle is often referred to as the master cycle. So that's the one that sort of markets can kind of follow and track there. So again, it doesn't work every year, but I find that the 60 years sort of got a pretty good weighting, 70-80% of the time there, sort of. And it's not, we're not going to exactly mimic or exactly follow, but I find that the sort of highs and lows of that period can be quite important, sort of turning points in the future. And just like I think I think when we were running, the commodity market was in the last boom there, sort of around, must have been 2007 or something there. The top in commodities, was exactly the same month, 60 years apart, because we had a boom there 60 years earlier. So you just sort of see these cycles sort of run back to back, and sometimes they can be running really tight here. I'll just notice here that the 60-year cycle has really been a pretty good measure and a pretty good indication as to sort of how the markets have run here. So if we look at all those sort of, I've just sort of marked the main swing highs and swing lows there. And if we overlay the same swing highs and swing lows onto the current period, you can see there's a bit of validity to the 60-year cycle. If we go to the next chart there, Chris, down to the current sort of move there. So I've sort of put the red as sort of the were the tops in the 90, in that 60 years earlier, and the greens were the lows 60 years earlier. So
if we go left to right, in January, February 1960, that was a top in the red.
That's right. Yeah. So that was the top there, and then it sold off into May but obviously, we sold off into March, but then obviously we end up being a low. But if you're positioned after January, February 2020 for the downside, you would have done it right. And then even if you waited till May to buy, you might have been right as well.
Still get a month.
Yeah. And then from June to October, not much happened there. But I mean, the low was in October. That's where the market took off. And that sort of followed a 60-year cycle as well, right up into November. So since then, it's been a bit messy. Bit of a lower high in March, was but yeah, came that 60-year cycle suggesting here around June, a bit of a bounce there, and maybe come back into October. So that's a sort of cycle there. So I think the 60-year cycle is indicating like a higher low in that was in 62, but I still think the US might go to a marginal new low here. So it's whether we go higher or lower is probably less important. It's the months just sort of to watch their returns there. So don't think you're going to get to a new high or a new low a lot of the time. I just find these cycles as important sort of turning points. So whether it's a higher or lower or a lower low doesn't matter. I just think oftentimes those months can become important. That's why I sort of like Gann always said, time was more important than price. And when your time's up. And I think that's sort of what he's referring to all the time is around these cycles as well. But so a lot of people don't measure time, but I think time can be really important. So it's just interesting cycle. What's probably more interesting is that the midterm year, which is one of the 4-year presidential cycles, that has got a really strong pattern here. Of all the presidential cycle years, the midterm's got a really strong pattern and a really strong strong performance. It's got strong performance there. And it's like the midterm years are sort of they're synonymous with these sort of these June, July lows and also October lows. So really if you waited till October, like every midterm year, you probably would have jagged 90% of the lows for the year. And then after October, you get some massive moves as well. So that's one thing about the midterm. It doesn't work every year, but it's a pretty high probability. But we do tend to get a bit of a rally here. So sometimes these rallies can be meek. So the rally up into August can be a bit of a messy sort of a weak rally. Maybe that's the case here. And then maybe get a shimmy back to October. But yeah, so just those are things just to keep an eye on here. It's probably I think the market looks a bit oversold. I mean, XJO's had a big correction for our market, so got some of the industrials are sort of showing a little bit of something. So but yeah, just got to be selective here. So resources, commodities, the only sort of stuff that I'd probably just stay away from. I just think there's still a bit of weakness there. But I think we'll see a bit of a relief rally in this. Definitely some sectors looking pretty interesting there, starting to sort of build some higher lows. Starting to see some volume coming, which is the one thing that I like to see. And that's the thing that the stocks that I've picked here so far, I've just looked at the sort of technical levels. I look for a little bit of relative strength, and I look for a bit more volume than some of the rest. And those are the ones that's the reason I've chosen. There's a couple there like REA and Domino I've sort of missed. I was trying to be a little too cute, but yeah, that's okay.
Well, before we jump on the trades, is there anything else you want to add to that XJO chart with the timings and the red arrows you've got there, or you think you've kind of? Yeah,
just look, the red arrows are just sort of the two sort of key turning points I thought for this year in terms of looking at all the cycles. They're just sort of sort of timings to sort of watch for. Usually sort of within a couple of weeks of those I sort of look at, and I mean, look at the XJO. The volume's been pretty solid the last 3 or 4 weeks off this low here. So actually seen a little bit of buying in here. So it doesn't mean you're at the low, but doesn't indicate that the participation has improved here. So whereas all the other rallies have been pretty meek and mild. So yeah, just and historically 16% is a big move for our market. So from a portfolio point of view, if you manage to sort of jag the short side and lighten off like the top like I did, then if you see the market down 16%, then I think it's time to sort of start allocating some of that into the market here. So I know it sort of feels a bit choppy and a bit negative out there, but it shouldn't feel positive at the lows. it should feel scary or negative. Do you know what I mean? So
That's
it
a
should
saying.
be,
It should be blood on
yeah.
the streets. Is that the low?
Yeah, a little bit. I know everyone's looking for this capitulation sort of, the market to get pummeled and stuff there, but yeah, again, everyone's looking for it. It's unlikely to happen. So yeah, maybe that comes later on, but yeah.
Well, when we look at the companies that you're trading, the shares that you're trading, you've got AX1, so you've got interesting. You've got a retail space in here. So, what's the appeal for retail when we've got rising interest rates and rising inflation? What do you see with AX1?
So everyone's sort of been caning the retail stocks pretty hard. So there's the Harvey Normans and Adair's and stuff. Those sort of stocks that we've sort of featured here. And yeah, I noticed that AX1, I think Nick Scali as well was the other one that I thought would look pretty interesting. So just seeing some of these, these sort of sectors that everyone's saying don't go near are all breaking up at a downtrend. So I think you want to see a little bit of positive consolidation. So the volume wasn't exactly impressive there last week, but we still sort of saw a little bit of a pop. So maybe maybe you want to sort of see a higher low or something build here, but I still think you're just seeing some positive signs here. So I think everyone said stay away from coal there a couple of years ago. Don't go near it. We know how that ended. So still hasn't ended. So yeah. So I just think might be pricing in a little bit too much negative sway here, and a lot of these stocks are a lot of the retail are on like 6 or 7 PEs now, and the yields are 8, 9, 10%. So even if you sort of shave 10 or 15% off the earnings there, the PEs and the yields are still very reasonable. So there's definitely some value there. I think might have been come off too much here. So just what you want to sort of see here is look for some sort of consolidation, look for these things to build. But so just those retail stocks were just telling me here that they're actually holding up quite well to me, and actually breaking quite a few of them, breaking downtrends and showing sort of signs of strength here. So what I say, don't believe the hype.
Well, if we continue that contrarian type view, you've got Reece Plumbing. So to have a look at the overarching part of that industry. In Australia, we've got construction industry is looking absolutely brutal, where many builders and developers are going under. It almost seems like another week. There's a whole development site that's who knows when it's going to settle or the houses will finish.
Yeah.
And you've put a plumbing company in here. So is that the same kind of thing? They're just super negative?
It's a little bit there, but you got to realize that when the price has already come off, it's come off more than 50%, Chris. So the thing about the thing about stocks and stuff and sectors is that they usually move like 6 months in advance of the market. So by the time the markets realize that the building companies are in trouble and that there's a housing slowdown, the stocks have generally already moved. They've moved. So they've been in decline here for again the last 6 months. You've already seen that decline of 50%. So that's telling you the housing market's potentially cooling off 50% here, which is probably the case. But we've sort of come back down to the old high there. Again, we saw a little bit of volume coming off that low. We've just seen a lot of stocks actually bounce off historical highs. So most of them are bouncing off the 2020 high, but in this case here, the 18 was a little high there. And just a bit of a key zone there. So again, just the fact that we've halved in price, and this is sort of not like I wouldn't sort of call Reece like a high growth sort of tech company that has the big, really, really deep, but a 50%, correction is pretty large here for, like a reasonable quality industrial. So yeah, the only one here has still got a little bit of a high multiple. The yield's probably not super attractive there. Like I think if you're looking for a bit more safety, this may not sort of meet your criteria there, but I just like the price action here. And again, what we want to see here is a little bit of consolidation. So I think this can consolidate here and then break up through a little pivot point. That's sort of one to keep an eye on there, because I like so far the volume's pretty light here. So again, it's already had a big sell-off. I just noticed it's sort of pulling back here in the last sort of week or two here on the pullback. The volume's been really light. So this tells me the selling's drying up here. So just wanted to put on the radar.
Well, that's a good one that we'll keep watching. You've got Aussie Broadband, and this is one group in that telco space that have shown sort of that relative strength that you were talking about with the retailers. So what's the attraction of the ABB chart?
Yeah, ABB, a lot of guys have been, liking the stock here, but had a super obviously IPO sort of start up and then went pretty hard there. Had amazing performance. It's just sort of cooled off here. Look, it's still got some pretty impressive growth numbers there. Still, by all means, pretty well managed telco. So just this sort of, I just noticed it sort of pulled back to around the 50%, literally, halved exactly what 603 down to 301. So, exactly 50% from the peak here. Just sort of stabilizing around here. It's a bit of a technical Fibonacci range as well, around that sort of 2/3 of the range. And yeah, just doing a bit of work here. So I think, what you want to sort of see is, again, see some sort of stability here, sort of a little bit of build here, show some relative strength. But again, we're seeing that, pull back here on pretty light volume. So the selling is definitely starting to dry up here. So yeah, definitely one to sort of put on the radar here. Just a few here that I sort of earmarked to watch closely here, to see if they can hold up here. So like Reece and ABB, I want to sort of see this sort of hold off the last low, see if it can sort of consolidate here. And then I'll be looking for a bit of once it starts to move up and build, we can follow it there. But it might take a week here to, a bit longer here, but there's just sort of stocks that I sort of keep an eye on here. So I'm not pulling the trigger yet, but definitely ones to sort of keep an eye on.
Well, ones you've already traded have been Domino's Pizza. You've picked up some of that in the portfolio, which we looked at earlier, and you showed how it's really helped the portfolio. What happens now that it's already had a bit of a rally?
Yeah, so I'm just looking to sort of hopefully try and add to these now. So I sort of got a good position on. They've had a sort of nice move. And yeah, I mean, the key things there is I was sort of trying to highlight sort of why I was looking at this as well. People are sort of, why are you buying some of these riskier sort of stocks here? But it was showing a little bit of so a little bit of volume sort of come in the last month around near the lows. So started to see some signs of what I call accumulation. Also a bit of a technical zone around there as well. Quite a deep correction. Retested, just sort of hugged that sort of downward channel as well. After sort of poking its head above it, sometimes it can track the channel down and then go here. And once we started to see it go off the lows there, that's when you sort of drill into your dailies. So if you drill into your dailies around there, it might even drill into your half hourlies. You start to sort of see tightening price action in there, and then some volume, and then a bit of a pop here. So that's what I look for. Just look for. I want to see volume come in, a bit of participation. Just want to see something technical, some sort of key level, and then sort of drilling into my dailies or half hourlies to sort of add to it there. So I just saw a few good signs in it. We've seen in the past there, the names like your Domino's and your Seeks and your car sales are sort of, those are the stocks that the growth stocks that everyone sort of generally jumped into in the past, sort of pretty quickly. So yeah, so I think if we see some sort of consolidation, a little bit of a sideways sort of shimmy there, sort of I'll probably try and look to sort of add here. But I just want to see a bit more consolidation there.
Double Corporation is another one that you've looked at there. This is one that you've picked up. Is it also one that you're looking to add if it keeps continuing how you'd like it to?
Yeah, so it looks a bit more speculative there. Obviously, a couple of people asking, so why we're looking at these stocks here. So I looked at some stocks that had really high growth and looked at the sort of sectors there and just looked at sort of the growth levels and just looking at whether looking at ones that are closer to approaching profitability rather than that are leaking leaking dollars there as well. So but technically we can see there, we saw the volume. Look at the volume sort of really pick up the last month there. So we saw some accumulation starting to take place. We saw a little bit of relative strength then, and then just sort of starting to sort of drill into our dailies there, just sort of show a little bit of strength as well. So that's the reason why I took in the stock here. I think it's it's got some pretty good long-term growth, and just the technicals, big level there. Technically a good volume as well. So just sort of putting all the pieces together. So again, sort of similar story. I think this has bounced from a good level, some good volume in there. So now we're looking for some sort of consolidation, some sort of little sideways little pennant or flag or something like that, and then you know, we can a high low, we can sort of add to that there. So yeah, I've only got a small position on each of these ones here, but yeah, I'll just you know, I think I've moved most of the stops up to sort of around break even, and hopefully I'll be looking for a place to add here if we get a, you know, if we get a little bit of a consolidation there.
Nice. Well, that's a great report this week. Good, solid returns that you should really be proud of. And if anyone wants to get in contact with you, your contact details are on screen. Talk portfolios and get you to be their broker and put the trades on. Is that how it works?
Something like that, yeah. So if they want some help, they can contact me for sure. Yeah.
Nice. Well, if you want to follow Gary's other reports or weekly reports, he's got his playlist on the right-hand side there. And then also Springs, which is a bit like the false breaks, a pattern that Gary trades often, is on the right-hand side. Thanks for joining us.
Thanks, Chris.